Do you want to know how to make millions from stocks? Let's dive into the exciting world of investing. Investing, in its simplest form, is the act of putting your money into assets with the expectation of generating income or profit. It's like planting seeds today to reap the fruits tomorrow. Its purpose? To help you build wealth over time and achieve financial goals, be it buying a house, funding your child's education, or ensuring a comfortable retirement. Now you might wonder, why start early? Well, think of investing as a marathon, not a sprint. The sooner you start, the longer you have to let the magic of compound interest work in your favor. It's not about timing the market, but time in the market that counts. So, are you ready to embark on this journey? Remember, the earlier you start, the more time your money has to grow. Now, let's discuss a vital aspect of investing: the concept of risk and return. In the world of investments, risk refers to the chance that your investment's actual return will differ from the expected return. It's the possibility that you may lose some or all of your investment. On the other hand, return is the money you gain or lose on an investment. Now here's a crucial point to note: risk and return are directly related. This means that the potential for higher returns comes with a higher level of risk. Conversely, lower risk investments typically yield lower returns. It's like a roller coaster ride. The bigger the highs and lows, the more thrilling the ride. However, every individual's risk tolerance is different. Some are thrill seekers, ready to take on high-risk investments for potentially higher returns, while others prefer a slow and steady approach. Always remember, higher the risk, higher the potential rewards. Before you start investing, it's important to set clear financial goals. Think of them as your destination on this financial journey. Are you saving for a house? Planning for retirement? Funding a child's education? Each goal might require a different investment strategy. For instance, a long-term goal like retirement might involve more stocks, while a short-term goal might benefit from safer investments. Remember, your goals aren't set in stone. They can change as your life does. Having clear financial goals can help guide your investment decisions. There are different types of investment options available in the market. First off, we have stocks, which represent ownership in a company. Stocks can be volatile, offering high potential returns but also carrying higher risk. Then there are bonds, essentially loans you make to a company or government in exchange for interest payments and the return of the loan amount at maturity. Bonds are generally considered lower risk than stocks, but they usually offer lower returns. Mutual funds and exchange-traded funds, or ETFs, are collections of stocks, bonds, or other assets. They offer diversification and professional management but come with fees. And let's not forget real estate, a tangible asset that can provide income through renting or selling at a higher value. However, it requires significant capital and can be illiquid. Choosing the right type of investment depends on your financial goals and risk tolerance. Ever wondered how to buy stocks? Let's break it down. The first step in buying stocks is to set up a brokerage account. This is an account held by a broker, which holds your stocks and other assets, much like a bank account holds your money. Many banks offer brokerage services, but there are also independent brokers like E*Trade and Robinhood. Once you've set up your brokerage account, you can start buying stocks. You'll need to do some research first, of course. Look at the company's performance, its products or services, and consider if it's a good investment for your financial goals. Once you've decided to buy, you'll place an order through your brokerage account. You can choose to buy a certain number of shares or invest a certain amount of money. When the market is open, your broker will purchase the stocks on your behalf. And voila! You've just bought your first stocks. Buying stocks has never been easier with the advent of online brokerage accounts. Now let's explore two main approaches to investing: long-term and short-term. Long-term investing is like a marathon. It's all about endurance, patience, and keeping your eyes on the prize, which could be a comfortable retirement, buying a house, or funding a child's education. It involves buying and holding assets for many years, allowing compound interest to work its magic. On the other hand, short-term investing is more of a sprint. It's about quick moves, buying and selling within a few months or even days, with the aim of making fast profits. It can be thrilling but also risky, like a high-stakes poker game. Each approach has its pros and cons. Long-term investing typically offers more stability and lower stress, but it requires patience and discipline. Short-term investing can offer quicker returns, but it comes with higher risk and demands more time and knowledge. Whether you choose long-term or short-term investing depends on your financial goals and risk tolerance. Let's talk about one of the most important principles in investing: diversification. Picture this: You wouldn't want to put all your eggs in one basket, would you? The same principle applies to investing. Diversification is about spreading your investments across different types of assets to reduce risk. If one investment doesn't perform well, others might. Now, how can you build a well-balanced portfolio? First, consider your risk tolerance and investment goals. Then, mix things up. Include a variety of asset classes, stocks, bonds, real estate, and more. It's also wise to diversify within these classes. For instance, distribute your stock investments across different sectors and companies. Also, remember to periodically review and rebalance your portfolio. As market conditions change, so might the value of your investments, and you may need to adjust your portfolio to maintain balance. In conclusion, a diversified portfolio can help manage risk and potentially enhance returns. Investing is a lifelong learning process. Just like the stock market, the journey to becoming a successful investor is not a straight line. It's a winding road full of twists, turns, ups and downs. And just as the market evolves, so should you. Investing is not a one-size-fits-all craft, and what works today might not work tomorrow. That's why it's essential to continuously educate yourself. By expanding your knowledge, you'll be better equipped to navigate the ever-changing financial landscape and make sound investment decisions. So how do you keep learning? Well, there are countless resources out there. Books are a great place to start. Classics such as The Intelligent Investor by Benjamin Graham or A Random Walk Down Wall Street by Burton Malkiel offer timeless investing wisdom. In this digital age, websites and online forums are also invaluable. Sites like Investopedia offer a wealth of information on all things finance. Forums like Reddit's Our Investing community can also provide unique insights and perspectives. But don't stop there. Consider subscribing to financial news outlets, following market analysts on social media, or even taking online courses on investing. The key is to stay curious, stay engaged, and never stop learning. Remember, investing isn't just about making money, it's about personal growth, improving your financial literacy, and ultimately, gaining financial independence. So keep learning, keep growing, and keep investing. Remember, the more you learn, the better investor you become. Let's recap what we've covered today. We've taken a journey through the world of investing, from understanding its purpose to the importance of starting early. We've delved into the relationship between risk and rewards, and highlighted the significance of setting clear financial goals. We've explored various investment options including stocks, bonds, mutual funds, ETFs, and real estate, and discussed their risk and return characteristics. We've looked at the basics of the stock market, the process of buying stocks, and the role of brokerage accounts. Our journey also took us through the realms of fundamental and technical analysis, long-term and short-term investing, and the importance of building a diversified portfolio. We've also underscored the importance of continuous learning and improvement in investing, encouraging you to seek out books, websites, and other resources for ongoing education. Remember, investing is a journey, not a destination. Happy investing!